It's time for the big three. We've got three stocks for you, three charts for you. Rick Ducat will take us through the charts, and here to take us through the stock picks today, Aquiles Larrea, the founder and CEO of Larrea Wealth Management. Great to have you both with us. Aquiles, let's just start with you and big picture thoughts on market performance so far this week.
Yeah, we're seeing, a bit of a pullback. We haven't had this much of a pullback. The big thing we have to see is we need these kind of pullbacks. We need an efficient market. We're also seeing that hedge funds, mutual funds, and large investors are taking profits right now. They're also harvesting losses. So that's another reason that we're seeing such this back and forth, along with what's going on in the government with the shutdown. And that doesn't affect the short term and doesn't really correlate too much to the market right now, but we could see going forward it affect the market a little bit more.
All right. So with that, let's talk about your first trade here. IONQ has been on a tear over the last month, up roughly 75%, I think close to 75%. Why is this one your first pick? And are you bullish or are you bearish here?
Yeah, we're absolutely bullish on this. We think that quantum computing is really the future, along with AI. We think that this area is very interesting as far as creating exponential growth. We also believe that the stock, even though we have seen a huge run up in the stock, that there is plenty of gas in the tank, as we say, for it to go further. We're looking at double-digit growth, anywhere between 10 and 14% within the next 18 months. We also, we're looking at things. This company has been around just a short period of time, less than 5 years. And the thing that we see in terms of this is the whole sector, the whole industry as a whole could be making a lot more money for investors going forward. So we're adding it to our coverage and accumulating quietly.
All right. So accumulating quietly, potential 14% upside here. Rick, what is the chart showing us for IONQ?
So short-term 20-day 1-hour chart, I chose this time because I wanted to highlight the price activity. This is something many traders can make a career out of looking for, more or less. So we had our rally, our sharp push to the upside, $40 to $76, almost doubling there. Then we had a pullback, a sideways to downward consolidation here that stabilized around the 60 level, which was our consolidative point in our old highs. Then we got our bounce. We broke out of our channel type shape here, our bull flag type pattern, if you will. It would look more like if we zoomed out. Now we are pushing above this short-term volume concentration area. We have another leg upward here before we hit these recent highs near about 74. So an interesting short-term chart here. Notice as well our short-term RSI breaking above that trend line and breaking into this overbought area here. So if we were to look at a yearly chart now, we can see that this same volume area once again stands out on the bigger time scale here. So this point near about 68, 67 would be a downside area to watch out for. Now we can also see our +2 standard deviation channel shows that we could see potential resistance just above near 76. That lines up roughly with our old highs. So an interesting confluence there to consider. To the downside further, the 60 level, our green line here, represents a high point and then a low point here. We can see a brief high point here. And then it also is quite close to our trend line and our exponential moving average, our yellow 21-day, and our +1 channel. So that level near 60 to 61 could be significant to the downside. Finally, a quick long-term look here. Really strong push to the upside here above +3 standard deviations on our weekly chart now.
All right. And right now trading at about $72 for IONQ. And you just showed us the year chart in the last 12 months. IONQ up more than 675%. Now, Aquiles, let's move to your next one, Nuscale Power. I know that they've been downgraded by several of the major financial institutions recently, have some concerns about their financials and their potential to execute some of their upcoming projects. Walk us through this pick.
Yeah, with any new technology, especially if we're talking about nuclear modular technology, you're going to have some hiccups along the way. So this is nothing new. But the thing you have to consider is that AI needs power, and you're not going to get it from solar. You're not going to get it from traditional methods. So you're going to need something like what Nuscale has in order to scale up, to these type of power demands that they need. We're looking for the stock really to grow about 11% in the next 18 months. We feel that although it's had a significant run up, we're going to face some near-term resistance, and it could be a quality holding going forward. We are looking at this as a value play. We're not looking at it as a super growth play at this particular point. We will buy on the dips. We will accumulate aggressively if we see that there are more moves to the downside or near-term resistance. But we feel that this could be a high-quality company to add to any portfolio. And once again, the AI future demands and needs this type of technology. And what I think is going to be amazing going forward in the future is that these mods or the modular systems themselves could be even smaller than what they are right now. And that could be evidence going forward 4 or 5 years in the future.
All right, so Nuscale, clearly a part of the AI trade. You can always spot one when you look at their year-to-date numbers. Up 125% right now for Nuscale Power. But Rick, walk us through the technicals on this one.
Yeah, for sure. These advanced computing systems require tremendous amounts of power. If you had a handful of uranium and a handful of coal, uranium is about 9 million times more energy, literally speaking. So definitely some interest in this area right now. But we can see in the shorter term, 20-day, 1-hour chart, once again, we seem to have solidified near the 36, 37 level here. We have broken through our short-term downtrend in purple there. We have reclaimed our more modestly sloping upward trend line there in blue, a little bit messier in that case here, but we are above it once more. Now a short-term white trend line here as price continues to push to the upside. However, the 41 level, our red line here, an old high point, a consolidative point before a breakdown, recent high point as well. That's the mark to beat. That is where the volume starts to dry up until we get back to 44. To the downside, 38 sticks out, heavy volume area as well. Also a boundary here with our light green line. So now if we look at our 1-year chart, we can see that the heavy volume area on our yearly chart, kind of the same general place, around this 36 to 39 level or so. But now we can see here, the situation actually looks like it's maybe improving more than it might have seemed, because we're crossing above our moving averages. They're both in confluence, yellow 21-day, orange 63-day exponential moving averages. We're also crossing above our linear regression line, our line of best fit, our fair value line. So this represents more of a bullish shift. Once again, 45, that level here stands out, old high points, and that's where the volume starts to drop off once again here, so that could be the resistance area. If we do break through to the downside through our volume node, 3050, an important recent low here as well, and an old high all the way back there. A quick glance too at our longer term chart here, almost 5 years. Just once again, a very strong rally to the upside, a little bit off the highs, but these patterns kind of repeat themselves. We had our big push, we had a pullback to support, now we're rallying again.
All right, now we're gonna move to a completely different sector here. We went from quantum to nuclear, and now we're going into a big bank and financial institutions here with Morgan Stanley. Aquiles, walk us through this pick.
It seems we're all over the place this morning, but with the growth, we also have to have a little bit of back to reality. Financials have traditionally made decent money for their investors. This particular company, Morgan Stanley, which I used to work for many, many years ago, is a company that we're seeing some significant growth there. There has been some near-term resistance in the financial sector, but now it seems that we're breaking out of that. At this, year-over-year growth looks pretty good. We're looking at a 6 to 10% growth in the stock price in, I want to say, about 12 to 18 months. But the thing to keep in mind is that in terms of valuation versus per se a Goldman Sachs and the like, we feel that it is pretty fairly valued right now with significant upside potential. So we're going to start buying Morgan Stanley again. And we feel, once again, high quality financials, bring them into the portfolio. They do well to diversify your portfolio, and you can make some more money on them.
And Aquiles, I remember from their last quarter earnings, a big conversation around their growth in investment banking and wealth management. Does that play any role for you, knowing that we're about to get their earnings again in less than 2 weeks now?
Yeah, well, you can't predict what the earnings are going to be on going forward, but you most certainly have to pay attention to those numbers, the wealth management unit, investment banking in particular, because those are the revenue generators for this company. We feel that there should be some significant growth, albeit a little bit near term. We're also seeing some near term resistance with this stock going forward. So don't be afraid to get in on the dip. Don't be afraid to add it to your portfolio. It's a significant growth vehicle going forward in the next 12 to 18 months.
All right, Rick. So are we in a buy the dip scenario here with Morgan Stanley?
Short-term look, perhaps that moment might have come already here because we bottomed out here near 154. That was the site of our old breakout point as well in our volume node. And there is a quantum computer tie-in too. Remember a couple weeks ago, HSBC was testing out quantum computing for bond trading here. Mm-hmm. So maybe this is the next sector that could be significantly disrupted by that. Hopefully we won't be out of a job. Hopefully there's no AI financial news anchors. But anyway, so we can see here that volume starts to drop off again above 158. Another notable spike here near about 160. So those would be some upside areas to keep an eye out for, as Aquiles said, with the potential short-term resistance here. If we were to look out a little bit further, the +1 standard deviation channel is quite close to current prices, just below 160 here, so that could be an area to watch. We are seeming to stabilize for now at our 21-day exponential moving average. A move below that could open the door to retesting these recent lows just below 154. From there, volume picks up again near 150. That's where we start hitting our 63-day EMA once more. But we are seeing a little bit of bearish divergence. RSI was weakening heading into this decline here, so watch for a push back above that level for further strength. 5-year chart looks pretty darn good still. I mean, not much to say about this, but once again, though, we are getting pretty close to the +2 standard deviation channel on our weekly basis. The longer time frame makes it even more significant, so food for thought.
Food for thought. Yeah, trading right now just below the $157 mark for Morgan Stanley. But I want to thank you both for being with us for the big three today. Aquiles Larrea and Rick Ducat, of course, our lead market technician here on Schwab Network. Thank you both.